10x Investments provides a full range of retirement funds. CEO Stephen Nathan joins us in studio this morning to share some tips on the best ways to invest towards your retirement annuity. Stephen, thank you very much for coming to our studio this morning. So, retirement annuity, first of all, what percentage of South Africans invest towards their retirement annuity, and what are some of the reasons why people don't?
So we don't have exact numbers, but most people that are formally employed with large companies are saving towards their retirement. So there's something like about 7 or 8 million retirement savers in South Africa. So that would be of formally employed people, it's probably just over 50%, probably closer to 60%. So 6 out of 10 people are saving. And that isn't enough, because clearly there's lots of people that aren't. And I think it's that people are quite apathetic towards saving, so they're living for today. Obviously, economic times are quite tough, so it's not that easy to have excess cash, but it's probably just that we're not as disciplined as we should be about this.
Now, what are some of the common mistakes people make when investing in their retirement annuity? Give us your top 3 that you've experienced.
I think people don't take ownership of their retirement investment, so they don't know where their money is invested, the returns that they are earning, and the fees that they are paying.
How do fees affect one's retirement annuity?
A retirement annuity is a long-term investment. So growth is going to be achieved by how much you save and the growth, the return on those savings. And fees are going to reduce your investment. So the key thing about fees is that they are a negative saving. So fees are like a dis-saving. And people have to understand that the more they pay in fees, the less they're going to get out of their retirement. And the compound impact of fees is dramatic. Percentage-wise,
give us a number. How much are people losing generally on fees?
So the average South African is losing 40% of what they could have. So their final retirement balance is 40% less, which is dramatic. And often that's the difference between a comfortable retirement and a very uncomfortable one.
And that's quite a substantial figure. Where are these fees going specifically?
So typically you pay 3 types of fees. You pay an advice fee, someone to give you advice. You pay an administration fee, a member record keeping fee, and you pay an investment management fee. And research in South Africa shows that the aggregate of those 3 is about 2.5% to 3%. So that doesn't sound that much, because people think, well, maybe my money's growing by 10%, so is 3% a big deal? But the compound impact of 3% over 40 years, a working lifetime, means that at least 40% of your final balance is lost in fees.
Now, Stephen, are fees, retirement annuity fees, are they regulated in South Africa?
So sadly, fees are not regulated. So a lot of people believe that because this is a regulated industry in general, that it doesn't matter what I do, it doesn't matter who I go with, or I don't need to know fees, I don't need to know where my money is invested. And that's a really big mistake, because there's no cap on the amount of fees that you can be charged.
What should people be asking their brokers then about their fees and where they're going?
So the point is, people need to take ownership of their retirement fund. It's their money. So if they do well or badly, they only have themselves to blame or to thank for that. So you can't outsource this decision. So you need to educate yourself, and you need to ask people, every person that's providing a service to you, be it your broker, your administrator, your fund manager, you need to ask what fees you are charging, and then you need to understand the impact of fees, because as we discussed, 1% doesn't seem like a big deal. But if you can save 1% over 40 years, you're going to have 30% more money. So you need to understand what fees you're being charged, and you need to demand transparency, so that you want to see on your investment statement what fees you are actually paying.
Now, for employees that are part of a company provident fund, for example, what can they do to find out more about these fees?
So if you're on a company pension fund, it's still your fund, and you're going to bear the responsibilities or the benefits of good or bad returns. So you've got to take ownership again. And you shouldn't act any differently if it's a company fund or if it's an individual retirement annuity. You need to find out, what fees am I paying? And you need to ensure that your company, your employer, or the trustees of your pension fund can answer these questions. And what you'll find is, if you ask a simple question like, what fees are we paying? Often the trustees won't know all the fees. So you need to demand that they themselves find out what fees everyone is paying.
In your experience, who or what is the real culprit behind slow investment growth?
So I think fees are a big impediment or big barrier because in the long run, if you invest in the stock market, you're going to earn a good long run return. You're going to earn something like 6 or 7% per year above the rate of inflation. So what we call a real return, inflation plus 6 or 7%. But if you're paying 2 or 3% in fees, you can see that almost half your return is being lost in fees. So returns in the stock market in South Africa have been really good, and that may surprise people because people might think, oh, we've had slow economic growth, we've had political challenges, but the returns of the stock market have been really good. So it's not stock market growth that's been the problem, it's high fees that have been the problem.
And how does one then avoid, I guess, potential rip-off retirement funds? What should they be looking out for?
So I think it's like any good or service you buy. If you are a passive consumer and you don't check the bill, you don't know what fees you're paying, it could be for your cell phone, it could be for a restaurant bill. I mean, if you didn't know what you were paying for goods and services, the chances are you're going to get taken advantage of and you're not going to get the best deal for yourselves. So you need to be empowered, and with the internet and social media, it's not hard anymore to find out the answers to these questions. Maybe 10 years ago, it was hard to find out what fees am I paying, where can I get a better deal. There's index funds, which are much cheaper investment vehicles. So there's been a lot of developments in technology that have helped people to become empowered. And we've seen industries that have been disrupted because the power base has shifted away from the company to the consumer. And we haven't yet seen enough of that in the retirement investment space. So the information is out there. People need to get off their backsides and just invest a bit of time, because if you don't, you're going to pay for it later on in life.
Clearly a very competitive industry. What then is 10X's edge? What do you guys offer?
So it's interesting you use the word competitive, because in a sense it is competitive because there are lots of established companies. There's over 1,400 different unit trusts, so there's a lot of choice out there. But that doesn't mean it's competitive, because in order for an industry to be competitive, it means that the consumer, the retirement investor, needs to easily be able to discern good from bad and compare products. And National Treasury did a research paper on this where they said, in fact, the industry wasn't competitive because people can't easily compare, because it's too complex, it's not transparent, fees aren't disclosed, it's hard to understand returns, there's lots of complexity because you get bonuses and loyalty points, etc. And it's actually not a competitive industry. So what differentiates 10X from other companies is that we have one investment strategy, and all of our clients are invested in that investment strategy. Whereas other companies will say, oh, we have a growth portfolio and a defensive portfolio and this strategy and that strategy and a multi-manager strategy. So they're giving you lots of options. And people don't understand those options because they're very complex. So they're almost forced to seek an advice. So you have an advisor which immediately is going to increase your cost of investing. Most advisors push investors into high margin products, so you're inexpensive investment products. They aren't promoting low cost index funds. So typically, because of the complexity and the choice, people end up getting poor value. Their money doesn't grow as fast as it should because they're not earning the best long-term returns, and they're paying very high fees. And what we do at 10X is we eliminate all of that complexity. We know how you should be investing for your retirement. So we're the experts. We automatically invest you in a portfolio that is appropriate for your time horizon. So you don't have to worry whether the stock market goes up or down, or there's a Brexit, or there is the rand weakness, because no one can predict those. So you're always invested in sensibly. We then use index funds to get a market return, which on average beats most fund managers that are trying to do better, and we charge you very low fees. So those three simple factors of time drives your risk, so we'll allocate a portfolio on time horizon, index funds and low fees, means that most of our clients are probably going to get 50% more than they would have with anyone else.
Stephen, what then are 10X's fees?
So 10X's total fees range between 0.3% and 0.9% excluding VAT. It depends on how much money you've got. The more money you have invested with us, the lower the fee. So as your investment balance grows, that percentage fee charge falls.
Okay, and how exactly are you able to charge such a competitive fee?
So we eliminate all of the inefficiencies in the system, and those inefficiencies not only do they often steer you in the wrong direction, but they add to your fees. So we don't charge an advice fee, we don't charge a separate investment fee, and we don't charge a separate administration fee. So we charge one all-in fee, and because we have a simplified direct model using index funds, we also are a much lower cost business than the traditional industry that's got these layers and layers of people and fees.
Okay, thank you very much for your insight today, Steve.
Thank you.